Morning, everybody. Currently sitting in a parking lot because I forgot Valentine's Day cards. So after this, I'm going to run into Target and go make magic happen at the school for Valentine's Day. For all of us, I know all of us on the call, we're entrepreneurs and we work a lot. And cheers to us and getting things done. So it is Wednesday. We're doing all things financing, creative financing. We've talked so far about temporary buy downs, permanent buy downs, contract for a deed, and seller financing. Pop quiz before we go into the next form of creative financing. Which one do you get between the seller financing and a contract for a deed? Which one provides the deed at closing upfront versus on the back end? Somebody hit it in the chat for me. No, somebody knows this.
Seller financing.
Owner
Is
financing. Yeah.
seller financing is when you get the deed when?
Upfront.
Yes. And then contract for a deed is when you get the deed when?
When it is paid in full.
Yes. Why would somebody want to do seller financing?
Seller gets to make some extra money, and there are multiple situations. For seller, win-win. Seller gets some extra money, and seller gets monthly revenue instead of getting bulk money at one time.
Correct. To avoid capital gains, right?
Yeah.
And love that, says Mita. And then what about
And for buyer, if buyer has a poor credit history, he may not get a lender finance. And also, by working directly with a buyer, they can save some kind of money. I mean, lender has so many additional charges. Sorry, Patricia. And so can avoid some extra charges which lender ask, but seller may not take that. And interest, buyer can negotiate better than buyer has option to negotiate with a lender.
yeah, well, typically too with seller financing, yes, the buyer can't get traditional financing. So y'all, we're independent contractors. If you can't show proof of income for a certain amount of years, it's going to be difficult for you to get financing. So seller financing may be a route to go. And if somebody has high amount of equity, they might be willing to do seller financing. The same thing applies with somebody that's an investor that you've tapped out on the amount of loans that you can get from a bank, right? And after that, you got to get other creative ways of getting financing, which could be seller financing. So Sasmina, thank you for that. What about contract for a deed? When would we see a contract for a deed take place? What type of properties? Land deals, distressed properties, right? And so you see that a lot, contract for a deed for land deals or distressed property, something that the bank will not finance the loan because the property is doesn't meet the traditional financing requirements. So just know that. So you'll see that in a land deal or in that type of scenario. So this one, I'm not gonna lie, I've never heard of it. If somebody else has, please hit it in the chat. And I'm going to slow roll this one because I have not, like I said, I've not heard of it. This one is called seller seconds. Patricia, you probably have heard this, but I've not heard anybody actually offer this. They say it's often called a seller carryback. And it says in here, and I'm going to read it. It says seller seconds are invaluable. It says properly disclosed seller seconds. Properly disclosed seller seconds can help buyers avoid PMI. Seller seconds can also benefit the buyer by allowing for a smaller down payment, lower monthly payments, or even avoiding higher interest rates on jumbo loans. So the traditional conforming loans for jumbo loans, I think it's over 800,000. Patricia, I know you're on the call.
Yes, that's correct. Yes, that's correct.
If this tells you how much inflation has come into play and the amount of equity people have, when this book was written, I don't even know when, the jumbo loan was max was 417, and I do remember a day when it was like 425, and now we're up over 800,000. But understand this, with a jumbo loan, Patricia, you can speak to this, typically has higher what?
On the jumbo loans, typically has a higher down payment
and a higher interest rate,
and a
right?
higher interest rate. Yes.
Yes.
Mm-hmm.
And so that starts to eat into their monthly payments. So you're seeing more fees going out for PMI. You're going to see more fees going out to interest, right? And not to the principal. And you're going
Correct.
to have more fees coming out of pocket for your buyer for a down payment. So I've again never heard of this as being an option, but a seller can offer what's called a seller second. So if you live in the luxury space, y'all, this is something you may want to dive into just to see, like, hey, if you've got 60,000 worth of equity and it keeps them out of having to get a jumbo loan, they can get traditional financing with the first loan, and that'll be the first lien, and then they can get a second lien on the property for a seller second as well, which if we start looking at the numbers, can really positively impact the buyer because they're not going to have to put as much money down. They're not going to pay as much out in interest because all 1% in increased interest is a lot of money over the life of the loan, right? And then they could avoid PMI. So I think this chart is pretty helpful in seeing this. Obviously, this was back. I mean, this, I say back in the day. I mean, I would say 15 years ago when I started selling real estate. But all this to say, this kind of does a side by side comparison of what that would look like. It says, essentially, if the buyer is buying a $400,000 home, now keep this in mind, this would be 800 now because the loan limit for jumbo has changed. But all that to say, so 400,000 with a 5% down payment, this is their primary loan, right? They're getting 380,000 from the bank, financed from the bank, and then this is their primary loan amount. And then down here it shows you your PMI payment, which is 160 a month. And then this tells you your full total monthly payment, which is 2561. Over here, in comparison, all of this is the same. You're putting a little bit more down for the seller second over here. And the loan amount now is 320,000. Your primary loan is 2,000. Your loan payment, I'm sorry. And then your seller second now is 60,000 and your seller second payment is only 419, which means you are your total payment is 2,441. So all that to say is it says in here, it says, so for a seller's house that falls in the just barely jumbo arena, their offer to carry back a second loan could save the buyers hundreds of dollars each month and thousands over the life of the loan. And that might just be the difference to get the house sold. Another thing that I saw as I was going into chat, which I would not have thought about this, you can do a seller second if the property does not appraise. So they
So
used it for appraisal gaps. Yes.
I have a question. So, as it relates to that seller second, although there is a loan max LTV, I saw in the thing you had a max loan to value, but when you take back a second, you also should have a max CLTV, combined loan to value. So, when you do that, how is that affecting the combined loan to value on that seller second?
I think that's where you have to pull in and LO what Patricia you're saying,
Mhm.
and do a side by side comparison.
Yes.
Like I think y'all got to look at the options, like, but that's kind of my whole point is like pull Patricia in and say, hey, this is somebody's willing to do a seller second, and this would be the interest, and this would be the payment, and then how does that compare to say a jumbo loan, Patricia? Or with an appraisal gap or whatever it may be. But all that to say is I've never even heard of a seller second. I'm very curious to know if anybody else has heard about this financing strategy. Anyone?
I have heard it, but also it is true most of the lender does not accept the idea of seller second. It is most, I mean, the first thing we have to begin, seller agrees or not, lender has to agree. And in this industry, most of the lender does not agree for it.
Yes,
Am
because
I right, Patricia?
yes, you are correct because most times it's going to exceed the combined loan to value when you have
Yeah.
a seller second. So you do have to give that, take that into consideration.
Hey, Patricia, I'd love for us to talk through that on another call
Okay, sure.
to see because I'm really curious. I don't know. I've never heard of it. So I
Yeah.
think it would be good for all of us to dive into it. Obviously, Patricia and I will dive into it, and then we'll do a side by side comparison. Today was just
Mhm.
a general overview of understanding that this is an option apparently, but then to Sasmita and Patricia's point, the loan to value is going to be an issue. So I want us to understand that that is what they're stating in here. That is a creative financing method. Now, when that's actually being offered, I don't know. Maybe somebody could go find Gary Keller and Jay Papasan at Family Reunion, and we could find out if they have more information on this, as they were the writers of the book. But I do think it's interesting. I've never heard of it. So anyway, but all that to say is true story. If you're working in the luxury space, understand the jumbo loan limits. Same thing with what is it for FHA? Patricia, do y'all still have that or no?
What's that? Say that again. I'm sorry.
Y'all have loan limits for FHA or no?
Yes, the loan limits for FHA is five and some change. Hold on. I think it's 541.
God, it blows my mind how much it's
Mm,
increased.
I know
Um,
it is. And two, it depends on county. So if you go, so if you're, let's just say for instance, if you're purchasing in Nashville or something, I mean, the loan limit is a lot higher. So kind of keep that in mind. The loan limit is based on counties.
which that's what I was just about to say, Patricia. I'm glad you brought that up. If you're selling in multiple markets, um, and you have a lender that is, say, primarily servicing the Nashville market, for me, this happened to me, primarily served the Nashville market. Well, the loan limit for a jumbo loan was higher than it was in Memphis. And they quoted some of my folks in Memphis. Anyway, long story short, the numbers didn't match up. And it ended up being an issue. So, like at the very, very last hour. So all that to say, understand to what Patricia's saying is the loan limits do vary by county. And if you're selling outside of just, I'm just making this up, DeSoto County or Shelby County, you want to make sure that you and the lender are on the same page in regards to where they're buying and what those loan limits are. Patricia, you got anything else to add on that? Sorry, I didn't tee you up for this. I
No,
just
no, that was fine. Just to your point, I had a customer that's purchasing in Nashville, and because we, are purchasing in Nashville, different county, they now qualify for FHA because they fit within FHA's loans limit. So just a point to what you were making.
And we'll dive, thank you, Patricia. We'll dive more into seller seconds next week. Again, like I said, I've never even heard of it, and it may not be relevant anymore. But I do think it's interesting. And all that to say is we've hit on several different types of creative financing, and we're going to keep going down that path because I want to make sure I show this really quickly. If I can pull this up, because we hit on this. Y'all, we're going through these three buckets. So the first bucket, we're already down to number 6 in creative financing, and this is on the seller side. We're going to go hit on 7 and 8 pretty soon, and then we're going to go to bucket 2, creative things to do for buyers, and then we're going to go to bucket 3, creative things lenders can do to finance a transaction. Patricia, I'll probably lean on you a lot on this section, but I love how they put it in buckets. So, like, let's get out of the traditional mindset of just selling real estate the traditional way. How can we be problem solvers, and how can we get creative to help people, number one, realize the American dream, or access equity to build wealth using real estate as their wealth building vehicle? So all that to say is lots of fun on this call in creative financing. I'm about to go get some Valentine's Day cards and then hopefully make it back for my lead generation at 9. Y'all make it a good one. Make it count. Tarnika, I see you on the call. Appreciate you and all your hard work yesterday. It was awesome. The event was amazing. I got a lot of great information from it. The keynote speaker was the bomb. And I would love to know when she's speaking again because she was amazing. So thank you so much to you and the culture committee. Y'all let me know if I can do anything for you. Y'all make it a good one. Make it count. I will see you tomorrow. Bye, everybody.